Hello guys, welcome back to the channel. Looking back at my trade journey, there's one thing I wish I knew and paid very close attention to some 5, 6 years ago when I started out trading. And this very thing, which I am obviously implementing now, that has taken my trading game to a whole different and consistently profitable level, would be time frame correlation. Time frame correlation is something that's taken solely based off of every single time frame in sync. Personally, I'm only looking to take a trade when I have every single time frames in sync, whether it be the weekly, the daily, the 4 hour, the 1 hour, the 30 minutes, whatever the case is. Well, it doesn't have to be all of these time frames, but I'm always looking to have a minimum of 3 time frames in sync. One of the very benefits of having to study the markets in a multi-time frame perspective is how it gives you much more trade confidence. This giving you more higher probability trades. In this video, I am going to walk you guys through my multi-time frame strategy using the sell trade I caught right here on Volatility 75 index today. Do want to pay attention to this video. Now, very quickly, I did send out the trade setup on my free Telegram channel a couple of hours before the trade entry was. All right, for sale, as you can see, January 2nd, yeah, where I said volatility 75 index, potential sell opportunity looming. This was the initial setup. And I went ahead to send the free signal when the setup presented us at trade entry. And you can see right here the proof that the trade was taken. Here we have the before and the after results for the very trade I'm going to be breaking down. Now, without wasting any further time, let's dive right into the breakdown. The first thing when we go to the market is we identify the trend. Where is the market heading? The trend is your friend, and you want to trade where the majority of the markets are going. Usually, I would love to start out from the higher time frames and then work my way down to the lower time frame. And if you would pause this video and move very quickly to your MetaTrader 5 platform and take a quick look at the weekly time frame, you will see very distinctively that the weekly time frame is in a downtrend. Now, the trading view version for this doesn't allow us go as high as the weekly time frame. But if you quickly do that from your MetaTrader 5 platform, you'd get to see that we're having the weekly time frame in a bearish market structure. And then moving to the daily time frame. So you can see from the daily time frame charts right in front of us, we're having to see the market presenting us lower highs, lower low, lower highs, lower low. This lower high right about here that led to the most recent lower low. So clearly we're having to see the market in a bearish structure. As you can see from the daily time frame. So we have the weekly time frame in a bearish structure. And then of course we have right here the daily time frame also in a bearish structure. Then this takes us to the 4-hourly time frame. From the 4-hourly time frame, we add ourselves a nice structure shift from bullish to a bearish environment, where we add this nice impulse move that leads to a new lower low from the 4-hourly time frame, shifting the market structure right here on the 4-hourly time frame from bullish to bearish. So now clearly we have 3 time frames in sync: the weekly time frame in a bearish market structure, the daily time frame in a bearish market structure, and then of course the 4-hourly time frame in a bearish market structure. All the time frames are going down. Why then would you be interested in buying on the 1 hour, 30 minutes, or 15 minutes time frame? It's a total waste of time. You only want to take a trade where the majority of the markets are going. So as you can tell, we have the weekly time frame bearish, the daily time frame bearish, and then the 4-hourly time frame bearish. As such, the only thing that makes sense is to sell this market. Since we're looking to sell, we will only find an area of interest to sell, which is the very next thing to do after identifying the trend. And from B, I only identify my areas of interest using the daily and the weekly time frame. Taking this down back to the daily time frame. This is where, of course, I found my area of interest right at this zone where we had the horizontal line here. Owing to the fact that from the daily time frame, this is a level where price has tested multiple times. And for every time has had to see significant movement in the opposite direction. What do I mean by that? You'd notice, looking back in time, we had at this point when price tested the level from the upside, where the level held up as support, where the level right about here as support. And then initially when we had the break of the level, we had quickly, almost immediately come to have a retest of the level, with the level holding up as resistance. And then looking back in time at that very level, right about here, when we were beneath the level, we had a retest of the level, and the level held up as resistance. You can see right about here, we had the level as support when we're above the level, support when we're above the level. You can see support when we're above the level. So typically, I would love to see at least a minimum of 3 times that price has tested a level and then has had to reject the level very strongly for the level to be an area of interest. And as you can see right about here, we've actually tested the level 1, 2, 3, 4, 5, 6, 7, 8. 8 number of times repeatedly from above and beneath. And then having to reject the level massively, making this level for me a very strong and solid area of interest. So as you can see, for every of the times we were above the level held up as support. And right here, when we were beneath the level, we had the level as resistance. Also right about here, the level as resistance. So in this case, right here, as at when we were looking to sell volatility 25 index from the daily time frame, we were testing the level from the downside, with the level in this case expected to act as a resistance. So in this case, not only are we under the area of interest, but all of the time frames are headed to the downside. So clearly, we are having to see price come back to test a daily time frame area of interest, psychological level, 35,000, psychological round number. And then as soon as we had a tap of the level from the daily time frame, what would you get to notice is a shift in the momentum. As you can tell, daily rejection candlestick close. That's telling us what? That the level is likely going to hold. And you can see that shift in momentum. Looking at the very 2 daily candlesticks that led to price rallying into the area of interest. You can see how we had a very 2 days bullish candlesticks. This and then the next day looking very bullish. And then as soon as we tapped into the level, what did we notice? We can notice we had a shift of momentum. You can see this daily candlestick ended up closing as not just a rejection candlestick, but then a bearish candlestick, telling us that what the buyers are losing steam from this very level, which is expected because that's a strong level area of interest, which is a strong seller's zone. Then, of course, we had ourselves the daily rejection candlestick, giving us clues that this level is likely going to hold. And not just that, after having to see the daily candlestick, we had the next daily candlestick close as what? A bearish momentum candlestick, closing even more bearish as compared to the previous day. With this telling us, of course, that what? The bearers have pretty much stepped into the market, and we tend to, from this point, get to see more selling pressures kick into the market, which ended up playing out. And now, from the 4-hourly time frame, what also had noticed was as soon as we tapped into the daily time frame area of interest, was the fact that we had a 4-hourly time frame double tops. As you can see, the M pattern right about here that led to the shift in market structure from bullish to bearish right here on the 4-hourly time frame perspective. So we had the shift in structure that was preceded by the formation of a 4-hourly time frame double tops M pattern, which is a sell reversal chart pattern. And then we had that break of the neckline, and then what at the retest of the neckline from the 4-hourly time frame is where we add our sell entry confirmations for shorts. So add a break below the neckline and then the retest of the neckline, and then also bringing in the exponential moving average 50. From the 4-hourly time frame perspective, we also add a nice break below the neckline of the 50 exponential moving average. And just like we had here, when we're beneath the exponential moving average, at the retest of the exponential moving average, we had the exponential moving average acted as what? A dynamic resistance. So at the break of the exponential moving average, clearly having to see price from the 4-hourly time frame below the exponential moving average, and then at the retest of the exponential moving average, also present, all right, at our very neckline of the 4-hourly time frame double tops, expected in this case to act as a dynamic resistance. So we had what? The neckline of the 4-hourly time frame double tops acting as a resistance, also in confluence with the fact that what present at the level is the 50 minutes, is the 50 exponential moving average present, in this case also expected to act as a dynamic resistance. And then of course we had what? The nice rejection, 4-hourly time frame rejection candlestick from the neckline from the 50 exponential moving average, of course. And I ended up having my sell entry from the 1-hourly time frame, taking this down to the hourly time frame. So right here at the retest of the neckline of the double tops as seen from the 4-hourly time frame, you can see clearly also from the hourly time frame, we have the break and then the retests of the 50 exponential moving average present right at the very level in the neckline of the double tops. And then again, even more confirmations from the 4-hourly time frame is the fact that we're having to see from the 4-hourly time frame, we're having to see as soon as we tested the neckline of the double tops from the hourly time frame, we had also yet another reversal chart pattern, an M pattern, which is a sell reversal pattern with more confirmations for selling, getting all the way down to the daily time frame. So I add my entry as soon as we add this bearish candlestick close right back below the 50 exponential moving average, where we had the second leg of the M pattern formation. That was where I had my entry confirmations for selling, owing to the fact that every one of these confluences were giving me strong reasons to get in on sell. So I was pretty much very convinced that what the market was ready to keep heading to the downside. And this is where, having entered on a sell trade right about here, I was targeting the 32 1000 psychological round number level as my level area of interest, owing to the fact that moving down again to the daily time frame, because what I pretty much identified my area of interest from the daily time frame. It's only expected what I'd be trading from what one key level to another key level. So from the daily time frame, having seen price sell from this very level, the very next level that comes to mind would be this level right about here, owing to the fact that we had this level previously as a support and then a support. So I had this as my first level take profit target or my selling opportunity. And then I had a second level targets right at the Fibonacci 27.8 extension level. As you can see, bringing in the Fibonacci from these daily swing highs to the most recent daily swing lows, right about here. We had the next level aligning with the 27 negative 27.2 Fibonacci reversal level as my next level area of interest, where I was looking for price to head right into, which ended up happening. And then as soon as I had my entry from the hourly time frame, this was a very fast trade. Price has pretty much been selling right from the time we had our entry with little or no drawdowns, and then currently running on a 1-2 8 to reward, even though I had the majority of my trade positions closed at this very first level area of interest. So yeah, that's it, guys. Thanks for staying till the very end of this video. Do well to leave me your thoughts on this in the comments section. And don't forget to hit the subscribe button so you don't miss out on valuable trade contents in my subsequent videos. Thanks, guys. See you in the next video.